The Roth 401k is a very valuable tool as you're looking to build wealth. However, it has two very unique, surprising attributes that you need to know about before you jump into it. I've got those coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So the Roth IRA and the Roth 401k get a lot of attention for good reason, right? This type of account, if you like today's low tax rates, or if you're in a lower tax bracket today than you think you'll be in the future, you can contribute to a Roth IRA or a Roth 401k. Those contributions do not save you tax today. It's not a tax deduction today, but they grow tax deferred, and then you can withdraw them when you're in retirement tax free. So it's a way of paying some tax on your contribution today, but then withdrawing the dollars, the growth, tax free in the future. Okay, so again, if you're in a low tax bracket today, or if your income's low today and you're and you're not paying much tax, or you simply just think I'm going to be in a higher tax bracket in the future, then a Roth is a great thing, a great tool to use. The Roth IRA, you've got to have income below a certain limit, and your contribution limit is up to as much as you make, but capped at $6,000 a year. If you're younger than age 50, at 50 and older, it can be $7,000 a year, but you've got to have earnings, okay? That's the Roth IRA. The Roth 401k, you can contribute directly into your 401k, just the Roth side of it, okay? So your contributions come right out of your paycheck, and your limit is $19,500 if you're younger than age 50, and it's $26,000 if you're age 50 or older. And again, those contributions into that 401k go into the Roth side, so they don't help you on your taxes today, but they grow tax deferred, and when you withdraw them, if it's a qualified withdrawal, you withdraw them tax-free. So, with the Roth 401k, there are two very, very, very unique rules that are bizarre, that you wouldn't normally think of, that you need to be aware of before you consider using the Roth 401k. What are they? I've got them right now. First, for a Roth IRA, in order for your withdrawals of the growth to be tax-free, you've got to have a Roth IRA account for at least 5 years. It's a strange rule. It's a stupid rule. I'm not going to go into all the reasons. I wish they didn't have that rule, but it's the 5-year rule. It's the Roth 5-year rule. There are actually two parts of it, but for this discussion, that's the Roth 5-year rule. In order to withdraw the money tax-free out of your account, you've got to have a Roth IRA for at least 5 years, and you've got to be age 59 and a half. If you meet both of those, good. You can withdraw the growth out of your Roth IRA tax-free, no issues. Well, a Roth 401k has that same 5-year rule. It's just if you then contribute to a Roth 401k and you're building that up, then when you retire, because you can't access that money while you're working there anyway. So you retire, and what are you going to do? You're going to roll that Roth 401k into a Roth IRA, and then you're going to start withdrawing it. Well, you met the 5-year rule for your Roth 401k, but that doesn't mean you've met the 5-year rule for your Roth IRA. That is stupid. That's ridiculous. So you've got this Roth 401k that you've been building, but you don't have a Roth IRA. So then you roll your Roth 401k into your Roth IRA, you've got to start that 5-year rule all over again. That is so dumb. So how do you get around it? Just put $50 in a Roth IRA right now. If you have enough income, so if you've got earned income, but you don't have too much, which is approximately $200,000 for a married couple, just throw 50 bucks into 25 bucks. Just get a Roth IRA open to start that 5-year clock. A couple questions. Does it need to be the same Roth IRA? Does each new Roth IRA at this company or that company or that company need to have 5 years? No, it's just in aggregate. In aggregate, total in your life, have you had a Roth IRA for at least 5 years? So just throw a little bit. If you're worried about ever not having a Roth IRA, just open a little one right now and meet that 5-year rule. Okay, stupid 5-year rule, but there's a 5-year rule for a Roth IRA and a separate 5-year rule for your Roth 401k. Now, you might be thinking, well, all right, I'll solve that problem when I just won't roll my Roth 401k over when I retire. I'll just leave it in my Roth 401k. I'm allowed to do that. I'll just do that. Well, that leads to problem number 2. Do you have to take a required minimum distribution from your Roth IRA? No, you don't. That's one of the great features, because the Roth benefit is that it grows tax deferred and tax free. You want to leave that money growing for as long as possible. So no required minimum distribution required. No required, right? So it can just continue to grow. That's great. All right. Well, do you have to take a required minimum distribution from a Roth 401k? Yes, you do. Yes, you do. If you are age 72 or older and have a Roth 401k, you've got to take a required minimum distribution from it unless you're still working. So if you hear me with the first rule and say, nah, I'll just leave it in the 401k, well, then you're going to be forced to start taking money out of it even if you don't need to. So there's a gotcha. The big idea is that you want to have a Roth IRA and you want to have met that 5-year rule. That is the name of the game. And then once you've met that 5-year rule or whatever, when you retire, you roll your Roth 401k into your Roth IRA. So you've met your 5-year rule and you don't have required minimum distributions. That's the way to do it. I don't want you to hear these complications as reasons to not use the Roth. I will be honest with you right now, all of my contributions are Roth. If you can't tell, I'm old, but I'm younger. I still have a long time in my working career, and so I want those dollars to grow tax-free for my future. And right now, I look at my tax bracket and say, oh, I'll pay tax at that rate. I'm good with that. I don't know what tax bracket I'll be and what tax rates will be in the future, but I like today's tax bracket. I like today's tax rate. I'll pay it. So don't see these two issues as reasons to not use the Roth. Just make sure you're aware of them. Your certified financial planner is aware of these. If they're just trying to sell you a product or get you into a certain investment, they don't care about these, and they're not going to talk to you about them. But your certified financial planner that is doing comprehensive financial planning is aware of these rules. They're helping to navigate you through these rules. So make sure you're working with your CFP on this. If you don't have one, contact one of the CFPs on my team. You can find us online, Korhorn.com, that's Korhorn with a K, or wisemoneyshow.com. You'll find us there as well, or just give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.